Welcome to Sky Broking Commodity Weekly Market Commentary. Disclaimer: this weekly market commentary is for information purpose only. Before taking any decision, consult a financial advisor. Major data of this week has inflation related data and the major events like US federal interest rate on Wednesday and the Bank of England interest rate on Thursday. MSEX closing time changed to 11:30 pm. So hereafter and coming Friday, MSEX having evening session only and NSE holiday on account of Holi. Now let's look into the precious metals outlook. Gold and silver has news like gold tumbled as risk appetite roared back after Russian President Putin noted there are certain positive shifts in talks with Ukraine. Gold was below the $2,000 level before President Putin gave investors hope that ceasefire talks were heading in the right direction, so bearish momentum easily sent prices towards the $1,960 level. Growth concerns, however, will not be going away anytime soon, and gold's pullback here should be limited. Gold might take some time to recapture the $2,000 level, but the bull case remains given inflationary pressures will continue to drive growth concerns and an immediate de-escalation in the war in Ukraine still seems unlikely. Fundamentally, this is a mixed news for precious metals, and technically speaking, gold has closes below until gold closed below 51,979 level, which means positive bias is ahead. Until silver has a close below 68,209, which means positive bias is ahead. So these are this week's precious metals outlook. Moving on to the energy outlook, first is crude oil. It has a news like Russia will have to shut in some of its oil production as it will be unable to sell all the volumes displaced from European markets to other regions, with Russian crude production falling and staying depressed for at least the next 3 years. Standard Chartered said on Thursday. Even before the US ban on energy imports from Russia, trade in Russian commodities had become toxic for many global players. Fundamentally, this is positive news for crude oil, and technically speaking, crude oil may expect a profit taking and any upswing is seen to utilize a selling opportunity. Next is natural gas. It has a news like gas is still flowing from Russia to Western Europe, and the apparent unwillingness from European countries to impose sanctions on the Russian energy sector is adding to the downside. Total liquefied natural gas sent out in Britain was nominated at 55 million cubic meters, up from yesterday's 44 million cubic meters per day. However, industry and government sources said White House efforts to boost US liquefied natural gas exports and cut Europe's reliance on Russian gas after the invasion of Ukraine are proceeding slowly because of the concerns about the impact on climate change. Fundamentally, this is a negative news for natural gas, and technically speaking, natural gas may expect a positive range-bound rate with resistances of 377.8 levels. So these are this week's energy outlook. Now let's look into the base metals outlook. First is copper. It has news like the US non-farm payrolls in February delivered greatly better than expected results. This is fundamentally a slight positive news for copper, and technically speaking, copper may expect a positive range-bound rate until close below 793 levels. Next is aluminum. It has a news like non-ferrous metals rallied slightly, but the investors were hesitant to enter the market, and the market shall watch how long and how great the price corrections would be. This is fundamentally a slight negative news for aluminum, and technically speaking, aluminum may expect a mixed trade. Next is lead. It has a news like in the spot market, the spot prices weakened further and smelters rarely made quotations. This is fundamentally a slight negative news for lead, and technically speaking, lead may expect a range-bound trade in between 180 to 190 levels. Next is zinc. It has news like European electricity prices halved. High energy prices still suppressed the supply side. This shows that the country has a strong positive expectation for the current market situation. Though the consumption side was sluggish as a whole, zinc prices may gain upside momentum if future demand picks up. This is fundamentally a positive news for zinc, and technically speaking, zinc may expect a positive bias. Next is nickel. It has a news like the London Metal Exchange's suspension of nickel trading after soaring prices left brokers facing huge margin calls has also upended the market for a key industrial commodity. Nickel is a key ingredient in stainless steel and electric vehicle batteries. Chinese producers of nickel sulfate used in EV batteries stopped offering product due to the lack of price visibility. Right now, given the volatility of nickel prices, whether the automakers still have confidence to develop their nickel-rich battery-driven business models is in question. While battery makers use nickel sulfate, stainless steel makers mainly utilize nickel pig iron, and under pressure from soaring prices, the Chinese company came up with a way to use nickel pig iron from massive deposits in Indonesia, unleashing a low grade. Fundamentally, this is a mixed news for nickel, and technically speaking, nickel may expect a high volatility trade. So these are this week's Commodity Weekly Market Commentary. For more market updates, join our Telegram channel and the YouTube channel. Thank you by Skybroking.